Hello guys, what's going on today? So I'm gonna do another recap of this week on what I've played and what I'm doing. But before that, I want to explain my strategy and how it works, because I feel like it was really confusing the first time I uploaded, and I got some comments about that on Discord and on YouTube as well. So let's go into what I do. This is Salesforce. This is a pretty good company. It's been growing for a while. It just keeps going up and up and up. And I'm kind of thinking of getting into Salesforce trading at some point. Obviously, the price is too high for my liking right now, but I don't have enough money to play it at the moment. But let's explain what I do. So a typical person that doesn't know much about the stock market and is trying to do options would pretty much buy a call, which you would buy a call like, let's say, at this range. So you'd buy one, continue. I'm not gonna buy anything. So you have to pay $760 for that call. But your idea is that the price is gonna go above this. So right now it's like 16 cents below, or it's like a 16 cents. You want it to go up like 40 cents. If it goes above this, the price of this option is gonna move higher. So if it moves higher, that basically means that this price would go up and you could sell it for more money. So like if it goes here, you buy here. This is a price. Oh, the price went down like $5 now. So now you're gonna be losing $5, and that's the idea. But all these expire on the 4th, so you want to sell this before the 4th at a higher price, so you make money. Which is you're betting the company goes up is what buying a call is. Buying a put in other cases is saying that the company is gonna go down and not go up. So the same thing you would buy at 644 and you'd want it to go down and you'd make money if the company goes down. Pretty much the same idea. But who are the people that are selling these contracts or these puts and calls? Well, that's my strategy. Instead of buying these and hoping it goes up to make money or hoping it goes down to make money, I sell them. So I would sell a put, which basically means I I put I'm trying to buy 100 shares of this company at the price I put it at. So for this company, it's at $2,400, right? If I am to buy 100 of these, I'm gonna multiply the 24 or the 240 by $100, which would be $24,000, which is the money I would have to put in to buy this contract as collateral. So I could put one order and I don't have the money, so it's gonna not work. It's gonna not work because I don't have the money put in, right? But the idea is my collateral is $24,000. But with that collateral of $24,000, I'm gonna sell this to somebody, and I would get paid $653 that day. And the other thing is that if the price stays above 240, if it stays above, like if it stays right where it is right now, I would get paid this and not have to buy any shares, not have to spend this money, right? That's the basic idea. But the other idea that could happen is it goes below the 240 mark. Let's say it goes down to like 239. Then I would have to buy them for this amount and I would be down $100, which is bad, but because I already made $600, it's not the worst case scenario. Because then I would be down 500. I would be up $500 instead of being up $600, or almost, yeah, 650, which is not bad in my opinion. But that's a basic strategy. And then there's another way. If you're, let's say, if it actually goes to 240, if it goes to that price and you're forced to buy it, right? The other idea is to sell a call, which is selling the shares back. Selling the shares back for a. Let's get rid of this. Actually, I think we gotta go here to get rid of it. Yeah, okay. So then if you're forced to buy 100 shares, the opposite thing you could do is sell them back for the same price you bought them at, and then also make some sort of money from that as well. So if I own 100 shares and I wanted to sell them, I could sell them at this price, and I would get paid $878, which is a really good amount of money, because it's a lot of people don't make this much in 1 week. It's a good amount of money, but you're risking $24,000, which is a pretty big risk, and that's basically my strategy. But that's this company alone, Salesforce. There's other companies you could do the same thing with that do the same, that have options trading involved, and I could show you like literally any company. Like, let's go to something that's way cheaper than Salesforce. Let's go to Nikolai's, like the electric car company. I don't really like this company much, but the prices are low on it. So in this case, you would sell a put because you don't own shares. You'd have to put collateral, and you would sell it. Well, you could sell it at any of these price points, like 113, 93, 78. You can sell it within any of these price points, and that's how much you're gonna get paid. So with this one, you get paid 100. Well, 113. With this one, you get paid 38. Like, you'll get paid less the lower you go down. But even then, it's not that bad of an idea. Because if you go here, it's pretty safe that you're not gonna buy anything. That you're just gonna make the $38. It's pretty safe, considering that it probably won't go down this far. It could, in theory, it could go down, but that's not the idea that you want it to go down for that range. And the strategy is called the wheel, because first, the wheel is pretty much a circle. Let's look at this, and we have like 4 different points here. So the first step of the wheel is to have the money to invest. So right here, you would need 17 times 100, which is 1,700, which isn't that much money, considering. I mean, anyone that has a regular job could make this money pretty easily. Anyone that doesn't have a job probably wouldn't, or whatever. But if you're gonna invest in the market, you're gonna need money. And the way I do my investments, it costs more money to make money, versus you could just buy shares. You could just buy shares at $17.40. If it goes up, you sell them and you make money. That's another way. But that's not my strategy or what I'm doing. So I want to show what I do. And then, so at the beginning, have the capital to be able to buy. So you would have to have 1,700 just for this company alone, and you'd have to have that money first. Second, you sell a put. You sell it at this price. Okay, let's say it doesn't go under. You just get paid. That's it. You're good. You got money. Great. Next week, do the same thing again. Next week, you get assigned. Okay. Next step. Next step, you're here. Now you're selling calls for the same price, and then you're making money as well, which is also good. That's like over here. Then you'll sell. Let's say you sell your shares back. Okay, so you're selling. You keep making the money. You keep making the money. At some point, it goes back up to the price you bought it at. You sell everything. You go back around, and you start back the strategy again. You start back from the beginning when you're selling a put, and you continue selling puts, and you sell calls, and you're basically going in a circle. But the idea is always to buy. Like, if you buy at 17, you want to sell them back at 17. So you get your money back, plus all of the money you get paid just for doing the contracts. That's how I make most of my money in the stock market. And I really like the strategy because it's really safe, or it's considered really safe. It's not always the safest. And you could mess up, like if you buy it here, and in the company it goes down to $10. Then you're down like $700 just alone. I mean, you made 150, but you're still down like $700. So you'd be down like 600, and you'd be down like 550, which isn't bad, but that's just another thing that could happen. But usually that won't happen unless you get really like messed up, and that happened to me. Oh yeah, I forgot I downloaded another mod. Well, I updated my mod. Whatever. Okay. So then let's go to what I did this week, and the contracts I decided to go with. I kind of got a little like messed up in the market this week because originally I sold a put at $51 per share. We could see DraftKings. DraftKings is at 51.35, which is not good because that means it's 34 cents, 36 cents away from me being forced to buy 51 or 100 shares at $51 per share. So I'll be forced to buy 100 shares at 5,100, which is not what I want to do. It's not ideal, but if it does happen, I could sell it back. It's the good thing. Hopefully it doesn't. I'm really hoping it doesn't. It expires Friday. And yeah, that's why like this isn't doing so hot. And hopefully it keeps going up and it doesn't go further than 51 because I don't want to buy in. And that's basically the first play I did this week. Then the second plays I took Neo. This plays worse than the DraftKings one. I put a contract at 48, and let's look at the options for that. So I put a contract for 48. Right now, I'm gonna be forced to buy 100 shares at $48 per share, which is $4,800. I'm gonna have to buy them if it stays below 48 by Friday. Right now, I'm 50 cents away from not buying, but I'm 50 cents into buying shares, which would not be the best idea. But then again, I could always sell it back to make something, which I would sell it back the week after, and it's not that bad also. But I'd rather not own shares at the moment. I'd rather just keep doing this until I reach my goal, which I'll tell you guys my goal. My goal is to reach in the market $15,000 alone. I put in $11,000, $164, or $11,164.29. That's what I've put in, and right now what I'm at is 1187 or 11,087, which I am down money, but that's because the Neo contract, the price I bought it at was 112, and right now if I'm gonna sell it, I would lose 100 or 277, which is bad, but I'm not gonna sell it, and I'll just get paid the 112, and then buy the shares. That's about it. Wouldn't be the worst situation either, in my opinion, because I could sell it back. But it does look a little bad right now. But towards at the end of the week or by Monday, it's gonna be better. Also, I added a couple more companies to my list of watching. Xpeng is also a company I'm watching now. This is a company I like the amount they pay. I like the price it's at right now. I don't really like the price it's at because the company is basically a new company and it's not a new company, but they got put into the stock market in August of 2020, which means the prices are crazy on it. It's not really like stable yet, but I like what the price is at. Like I want to find shares that are around like $50 mark, $40 to $50 mark, so I could trade like half the money I have because I have like $10,000. So I would be buying like $5,000 and $5,000 of two different companies. That's mostly what I want. So I added this one. Then I also added Workhorse, which again is another company that is battery electric vehicles and aircrafts. Just read what it's about here. But the reason for this company is because it's kind of not new. It's kind of old, but it's been getting a lot of it's been going up like crazy recently. I still don't think it's stable enough to go in because like May it was at $2 and now it's like at its highest was like at $30, which it doesn't seem good because it could always go back down to this range. But I like the options on it as well. I like what they're paying with their contracts, which is nice. But Yeah, those are just new shares I'm looking at. I'm also still looking at all of these. I don't think I'll really trade any of these for a while. And most of these I don't really think I'm gonna trade. But the ones I usually keep on the top are like possibilities that I'll trade, or like ideas that I'm looking at. These are like the main companies I'm looking at. And yeah, let's go to our spreadsheet now. So I didn't add like a Neo or DraftKings again because I played them again this week. So there's no reason into making a new Neo and DraftKings tab. So the contract that I showed for Neo was at $48. I made 112 again, like the previous week. So we do 48 minus this, that's 45. What this means is that if at any point I want to sell the shares and take zero profit, I could sell it at 45 and 76 cents, which would mean I would make $0 from this whole like 2 week thing, but I would get my money back, which isn't the worst situation. It's pretty good in my opinion. But people say, "Oh, but you're not taking profit." But then again, you're not losing anything, so it's worth it. And then since we did DraftKings also, we did a contract at 51. Then we made $125. We made $20 more than last week. We also do the same thing, subtract it. That's our overall cost. If we break even, if we sell at 48 and 70 cents, we'll break even and we'll get all our money back, which is the idea. But that's about it for the trades. Next week I'll update you guys on what happens if I buy 100 shares. And also, if I do buy 100 shares of Neo, then I could show you the reverse of what I should do. But yeah, we'll see what happens next week. And I'll see you guys later.